Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COD data, which is essentially what hedge funds and the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Now, starting here from the monthly time frame, what we can notice is that at the moment the market is testing quite precisely the previous monthly low of the support and demand area that we have identified here. In fact, we can notice how exactly here the market reached the lowest level of this quite strong historical monthly support and demand zone from which all these previous rejections to the upside have been created. And what we can see is that at the moment the market has just reached exactly that low, and it seems like it's starting to respect it as support. We can see, in fact, the market tried going lower, however, buyers stepped in, and at the moment the market seems to be in the process of creating a rejection away from this historical monthly support and demand. We can also notice that if we follow just the most recent price action, we can notice a massive impulse to the downside. After an impulse, the next logical step would be for the market to show a correction, because no market can just go down in a straight line. Every market will need a series of impulses and corrections, which in the case of a downtrend are the creation and the building blocks of the downtrend itself. So lower lows and lower highs. That is basically the foundational structure of a bearish trend. So from a monthly standpoint, we have the impulse. The next logical step would be a correction. If we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse leg, which shows us how we have a 0.382 retracement, which is currently exactly at this level, which is also in confluence with the previous weekly and also monthly, as we will see later, support, which is now turned resistance here. Now, speaking about the weekly time frame, if we go down on the weekly time frame, we can see how this level is also quite important from a weekly perspective, as I have just said. This level was the turning point here for this market, and again here, then the market broke it to the downside, and that previous support was turned resistance, and the market respected it as resistance here. So there is the possibility for the market to want to go and test again what kind of liquidity there is inside of this zone, considering that this is a confluence of resistance, as we have just seen on the monthly time frame, because we have the horizontal level of structure and also the 0.32 of the Fibonacci taken on that monthly impulse leg. Dropping down on the daily time frame, what do we see? Now, here on the daily, we can see how the market has just created a massive rejection away from the previous low. Now, I spoke about EURUSD just a few days ago when the market was around this previous low, and I explained all the reasons for which there was the good probability of seeing this rejection to the upside, and in fact, that is exactly what the market gave us. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. But at the moment, what we can notice is that the market has broken again new structure. In fact, what we can notice is that this level here, which was the previous daily resistance from which this rejection to the downside was created, is now turned support here. So essentially, the market just shifted from creating lower lows and lower highs, so from having a bearish trend from a daily standpoint to now having higher highs and higher lows. So there is the possibility of seeing more bullish price action being created away from this level. We can also notice that as we have an impulse and correction, also here, if we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg, and this shows us how we have the 0.32 and a 50% and 0.618 Fibonacci retracements lining up around this area, which is also the previous resistance turn support, therefore creating a confluence of support inside of this level. And when there is a confluence of support zone, there is an increased probability of seeing institutional longing inside of the area. Now, speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing. Now, if we're looking at the data for the euro, we are already looking at euro USD because all currencies on the spot are traded against the USD. And we can notice how with the last reports, net positions have been increasing. We went from minus 75K to minus 60.3K net positions. So clearly, institutions are starting to move slowly back to the bullish side for Euro USD, increasing their longs from 152K to 162K from an institutional perspective, and decreasing their shorts from 232K to 223K. So clearly, institutions are starting to move back to the bullish side for the euro, therefore to the bullish side for Euro USD. So if we move back to the chart, what do you have? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you'll find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, as the market is testing this strong confluence of support, there is a good probability inside of this confluence of support area to see more institutional longing. Now, if that will be the case, at that point, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction, impulse pattern to the upside. That definitely wouldn't surprise me. Now, all these general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg, because if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website, which you find also linked in description. Here, you will have the possibility to gain access to all my courses. So really complete courses that will guide you from the very basics of charting all the way up to more advanced concepts like building algorithmic trading strategies using quantitative finance tools like the quant analyzer to build portfolios of strategies, and a lot of really important and really interesting things that you need to know if you want to become a better trader. So this is something you really cannot afford to miss. You also have the possibility to gain access to the trading station software with the Telegram notifications integration, one-on-one mentoring directly with me, the COT data software that you often see me use on the YouTube channel, and you also have the possibility to integrate with gaining access to all my EAs, so my personal EAs, the ones that I have developed and that I trade on my own account, and also to have access to the trading show, which is essentially a live stream of all trades coming from my account directly on the Telegram channel as they are executed and managed. Here on the website, you will see that there is the complete presentation of all the EAs that I personally run. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. And there is also per time slot the special discount. So at the moment, there are 10 days before the next price increase. So I would really suggest that you go and check it out as soon as possible. The link is in description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.